Every disaster is different, but the best comparison we can find is the Kobe earthquake of 1995, and we would make the point that within 2 months of the Kobe earthquake, industrial production in Japan was back at pre-earthquake levels. Interestingly, over the period shortly after the Kobe earthquake in 1995, the Japanese share market fell for 3 to 5 months. It would also be important to note, though, that the Japanese share market was very expensive at that point in time, 3 times more expensive than the rest of the world, in fact, and was also implicated in the failure of the Barings Bank with Nick Leeson, who had a very big position in Japanese futures at that point in time. It's important to remember that the affected area on the north coast of Japan represents about 6% of the Japanese economy. It's also important to remember that the Japanese economy as a percentage of the overall global economy represents about 6% of world GDP. So in that context, and recognising that it's highly unlikely that industrial capacity and production capacity in Japan is likely to be permanently disabled, it's very difficult to see how this can derail the global economy and the recovery in the global economy. The most pressing questions is how will the disaster recovery be paid for? It would seem that the Japanese government have 3 options. They could issue bonds to Japanese households who are very loyal supporters of Japanese bonds. They would probably have to increase the rate of interest paid on those bonds, which would force upward pressure on interest rates from albeit from a low level. The second alternative would be that the Bank of Japan could print money. The impact of that would be more than likely to devalue the Japanese currency, which, when you think about it, would actually help the export sector of the Japanese economy. Finally, the third alternative would be that the Japanese government could sell some of their US bonds that they hold. The Japanese government is the second largest holder of US bonds in the world. If they were to take that tack, and we think that's unlikely, but if they were to take that tack, that would reduce the value of US bonds and increase the income yield on US bonds, or serve to increase long-term interest rates in the world, which would be felt by mortgage holders in the US because their mortgage rates are based on long-term interest rates, as well as increasing long-term interest rates around the world. In speaking with people at Platinum and also Magellan Financial Group, they tend to favour the first 2 options, which is the Japanese government releasing bonds to pay for this, with some support from the Bank of Japan. Japan represents around 15% of Australian exports. So in the short term, it seems highly likely that there will be a dent in those exports, and then as Japan reconstructs, that will get back to normal and accelerate. Some of the other areas that are likely to be affected are things like inbound tourism. Japan and New Zealand, who've both suffered from separate crises recently, form a large part of inbound tourism. So we're quite cautious on companies in Australia that revolve around overseas tourists. So these are things like leisure parks, hotels, particularly in Queensland. Energy production in Australia could actually be a beneficiary for this, as the whole nuclear debate is going to fire up, possibly making other sources of energy such as LNG and coal more attractive than nuclear. Highly unlikely that this will derail the world economy, given that this is only 6% of Japan that has been impacted by this disaster. We do think that there's going to be some interesting investment themes coming out of this, revolving around how Japan is proposing to finance the reconstruction, and we think investors should pay attention to this. For further information, we'll be posting updates on our website at www.gemcapital.com.au.